all these rejections from the middle Bollinger Band.
Resistance we're going to need.
If you actually see here, we get a
And we'll look for a healthy higher
I
low.
would not
don't have
be
the
convinced
pullback
to
to
enter a
strong
long trade.
Hello, MJ friends. I just recorded this thought and didn't press record, so we'll try it again. It's still early in the morning. Trading's going on. It's about midday, actually. And I just want to point out something that played out for me, and hopefully people can learn from it. But it's an example of how entry point means everything, how psychology of the market can shift based on certain events, risk to reward, all of that. So to start it off, heading into today, we know two things. Number one, the bulls have to break the highs of yesterday early on to give confidence in continuation on this bull move. We know the daily consolidation for the sector is coming in the near term, especially CGC running 20% in 2 days. We know the temporary top is coming sooner rather than later. And we know that when that temporary top is hit, we're likely going to pull back at least 5% very quickly. So heading into this morning, I swung ACB last night with an entry near the end of the day at 594. And so heading into this morning, it was a smaller position. It was definitely exposed to the reaction of APHA, which at this point is a bullish reaction. But pre-market initially, we had a bearish reaction to the sector. So that set the tone a little bit with a little bit of risk. So we entered the morning, we start the morning, and we don't break resistance first thing. So that leaves the high of yesterday intact, and we start to pull back. At that point, I have no clear support levels to be going off of in terms of where my entry was. My entry is kind of floating in space, and it was dependent on either a gap up open with a bullish reaction to APHA earnings or a quick bull move to break the high of $6 first thing. Because we started pulling back first thing, and my position is floating in space, so to speak, I don't have a clear stop level established, and I put myself at the risk of potentially buying just under the top. And if the daily consolidation had started this morning, I would obviously be in a very bad position. So I had to exit with a small loss first thing to remain protective. I knew that the odds that we were going to at least see a short-term bounce like the pattern has been the last couple of mornings was likely going to take place, but I can't rely on that because if I'm wrong and if this is the pullback and this is the temporary top, I'm exposing myself to that quick 5% drop, which I certainly don't want to do. So I exited with a small loss at that point, and obviously the bulls turned around and I would have made a lot more if I held. But what I did do is I exited that position because I had a poor entry point in terms of risk to reward, in terms of a clearly established level of stopping out. And then I went over to CGC and watched CGC break the high of yesterday at 38.03, and that was the bull signal. So once that occurred, I entered CGC with a much larger position than I had on ACB for a number of reasons. My risk and reward is higher on swing positions, so I lower my position size to reflect that greater percentage swing possibility. And my entry here had bigger shares because I'm a lot more comfortable. We just broke key resistance. We're getting bullish follow through like we've seen the past couple of days. So I then played my strategy of just short-term trades, locking in that profit while I had it. And what that did was it erased my loss of the ACB and gave me some green on the day. And then with an oil trade, I'm now back to my daymaker. So again, continuing the daily step forward, but I definitely left a lot of money on the table on ACB. And the reason that I had to do that was the risk to reward. The risk was too high with no clear support level nearby. And it's one of those scenarios where, this is where people get in trouble with not using stop losses, because had I just held, it would have worked out. And that would have positively reinforced a bad trading habit with, a win in response. It's almost like if you're training a dog and the dog does something bad, but you still give him the biscuit, that's going to confuse him and be a bad thing. That's why, when new traders start out, it's almost a bad thing. If you are a new trader entering a bullish market, you get all these habits that you used to, you think you got it figured out. Unfortunately, some crypto traders quit their job anticipating that bull market was going to keep up, and it's positive reinforcement that's not always going to be the case. So had I held, would it have worked out? Yes, but the risk, again, was just not worth it because I would have exposed myself to potentially buying the top and seeing that big pullback. So just wanted to share how entry point can mean everything. And it was a reminder to myself, you don't need to get fancy in swing positions. Clearly, day trading, scalping is working for you long term. So just keep doing that. So being able to start the day with a fresh, clean slate and no positions for me allows me much more confidence waiting for the key signals and the trigger on the shorter term timeframes than if I'm essentially, like I said, just starting the morning, being plopped down in my position and floating in space without any clear levels and clear game plan established at that point. So I just wanted to share with you all some of my mistakes this week, and due to my conservative nature these days, my mistakes are leaving money on the table rather than giving money back, which is the way I like it. Always nice to learn from mistakes without having to pay to learn. And it's really just, again, my trading style would be very different if my situation were different. 2 years ago and last year, my trading style was way more aggressive, all in positions. With cryptocurrency, my entire account was all in trading at least 50 times in 2017. In Canadian MJ, I was all in at least a handful of times. I was in with half of my account many, many times. And after locking in those gains for 2 years now, the last thing I'm going to do is risk that and give it back. So everybody has a different style. And if I were just starting now, or if I had, a smaller amount of capital, I would be a lot more aggressive in this space. But I'm not going to get greedy and try and risk significant gains that have already been had just to try and keep making more. And that's just where I'm at as a trader. Let's get into some regular old technical analysis. Hey everyone, checking in now, fast forwarding through time at the end of the day. We're going to look at MJ names from Canada. Tomorrow I'll do a US video. CGC, APHA, ACB, Cron, TLRY, TGOD, OGIN, HEXO, TRST, and FIRE. Was just recognized out in public for the first time by a stranger ever. So now I'm famous. Gonna give him a free course, free membership, all the good stuff. So try and find me. You get free stuff. So don't do that. So to set the tone to start off the morning, we had a earnings report from APHA. It is the first in the sector. That is important. And it's going to see correlation with other names. It's as the sector develops and as it matures. Like I said in the last video, it happens all the time in major stocks. Netflix is the first earnings for the tech sector. Everybody in the tech sector responds to those earnings. So at first it was a bit of a bearish reaction. We also have the news of the CEO stepping down. Whatever your opinion is on that, the market responded pretty well to it. So in the end, it was probably short sellers got some things right. Short sellers over embellished some things, but you don't say nothing and then just step down from a company if there's nothing to hide. That's all I'm going to say, but they're now out of the way. Company's ready to move forward. I wonder if longs are thanking the short sellers for cleaning up the company a little bit. We'll see who comes in to replace them. They're not gone yet until they get a replacement. So we had that news come out. We had a initially bearish reaction. So the pre-market was a little bit of a bearish tone, and then the bulls stepped in once the bell rang and really started following through. So a bullish reaction to the APHA earnings. We had TLRY with news come out and say, hey, we have a bunch of shares coming unlocked and we're not going to sell them. So that's, you take it with a grain of salt, but obviously the market responded really well to that. I want to say something now. If you're looking to act on shares becoming free trading and you're looking to do it within a week or two before it's going to happen, it's probably a bad idea. The market is smarter than that. They know it's coming. It's already been priced in a lot of the time. I forget which other company it happened to. I believe it was TGOD, where we had the day that, these shares become free trading and we saw a huge move up. And that's because, again, the market knows what's coming. When it's a known event, it prices it in. We all saw what happened with the first day of recreational sales. So again, if it's a known event, don't think you're going to outsmart the market because the market is smart. So this was a pullback day, and it's a bearish reversal candlestick on the daily time frame, but it was a different kind of pullback than we usually see. We're used to these huge bull moves, and we're used to the rug being pulled out and a very sharp drop, and it's the kind of thing where it's like, okay, the top is clearly in at this point. There's a lot of bear volume. We dropped 5% very quickly, and at this point, we did drop, about 5%, but it wasn't the kind of very convincing drop. It was more of a slow and steady kind of consolidation. And if we look at the 15-minute time frame, again, there was one little drop down there that got a little bit extreme, but bulls bounced off of that at the end of the day. The hourly time frame, fairly healthy consolidation. There's no kind of red flag here. So there's nothing that's screaming to me that this is the top right now. And these bulls can still come out swinging next week. Same thing with the S&P 500. Again, watch that video over the weekend that I'm going to do, but they still have a shot to come out swinging as well. The S&P 500 and oil have both held up really well. The S&P 500 more notably so the past 3 days, trading sideways and consolidating. So we can see more bullish action this coming week. So the daily time frame is a bearish reversal candlestick with an upper wick. It's called a shooting star at the top of a bull move. But we always want to zoom in and look at those details. Have we lost the hourly trend? And the answer is not yet. So the most important support level is 37.77. If we break that, it's the low of the day, 36.62. If on Monday morning the bulls can hold 37.77 and see some upside, they just have to break 40.80 and see that follow through. So that upgrade for target of $40, I don't think they meant in 1 week. But again, I will admittedly say this move, the magnitude of this move for these major names with major market caps is surprising. The amount of dollar volume that's come in. And obviously that's a great sign. You know, it's like an injection of life into this sector in terms of trading opportunity and volatility and all those things. There were actually 2 older men at the gym where I ran into this stranger, and I walked in on them talking about marijuana stocks. These guys were, you know, upper 60s, lower 70s. So that was a fun conversation. But we're going to be watching that hourly higher low and see if the bulls can hold it. As far as the longer term time frames go, so weekly chart, we'll just look at CGC. I'm not going to go into every individual name. Right now we have individual names that are either in the middle of their bull move and just starting to consolidate. They've already pulled back on the daily time frame and already seen continuation, which is the ideal scenario, or they are just starting their consolidation and just starting to pull back. The number one thing that we need to see is after a big bull move like this, if we see a higher low and higher high, and this is the same thing for the S&P 500 weekly chart, but if we see a higher low and higher high, that gives such a surge of confidence to the sector that, you know, this isn't a pump and dump. Obviously, we already know that if you're familiar with the sector, but it isn't a pump and dump. The bulls are buying the dip. We're seeing money continue to come in even after significant gains have been made. That's what we want to see on all of these names. And we'll look at a couple names where that has already happened, but this is more important to me on the daily time frame than the weekly chart is right now. So if the daily chart gets the higher low and higher high, that's great. Then we zoom out to the weekly chart. But that's step number 1. And yes, we had, you know, little stutter steps in here in continuation, but I want a big bull move, healthy consolidation, continuation. Then I'll zoom out to the weekly time frame and start looking at that. But that's the most important factor for the bulls on this trend change attempt. And obviously the odds of changing this trend are very likely at this point with how many resistances we've broken. So APHA, bullish reaction to earnings and to CEOs stepping down. And the low of this gap fill is 1030. And the high of today is 955. So there is still space to fill this gap. The bulls have been in control the last 7 days. It's been a back and forth, red, green kind of game. But they're holding on to their support levels. And we just broke support by 2 pennies at the low of this morning. But bulls obviously bought that dip. So we look at the hourly time frame here as well. This is the base of support the bulls really want to hold on Monday. If they hold $9, $9.55 is key resistance. If we break $9, further consolidation is coming and a daily inside bar would then be likely. So it's all about this hourly higher low that these names establish at the end of Friday. And on Monday morning, can we hold those levels or is further consolidation coming? And of course, with the past 3 days, we see the first 5 minutes, first 10 minutes with the dip, and then the bulls buy that dip significantly. So even if we do break, let's say we break $9, if the bulls buy that dip in the first 5-10 minutes of trading on Monday and then hit a new high of the day, that we have to take that, you know, at face value and say, all right, even though we broke support, bulls bought that dip aggressively, so they are still in control of this move. ACB on the daily, significant bull move, significant increase in volume, pretty much the ideal day here for ACB, and the volume was key. Very early on, we could see it was huge volume. So a nice bull break of 831. This is changing the weekly trend because we pulled back here. We had the low. We bounced and set resistance at 831. We held support. That's our higher low. We have changed the weekly trend. A bull MAC decross is going to happen here on the weekly time frame if we can keep this up. And again, there's a lack of resistance after 1065. We're looking at a big time lack of resistance on this weekly time frame for ACB. So that's something that's certainly exciting the bulls as well. Again, everything that I'm saying now, if we're going to get weekly trend changes and weekly continuation, we need the S&P 500 and oil to give us that weekly higher low and higher high as well to be full steam ahead for the bulls and to have a lot of confidence in this sector. Cron on the daily chart, another one where it's just astounding how much follow through we're getting here day after day and getting up to this resistance. It's a double top at this point. We technically broke it by a few pennies, but anything under $14, I'm considering that a double top. And if we keep the hourly uptrend, we're going to keep testing this resistance. So the hourly support here is 1341. and we have to break 14 on Monday for the bulls to see continuation. If we lose the hourly uptrend without breaking 14, we're going to look at the possibility of a cup and handle pattern, and you can already obviously see the cup. And technically, the right side has to be lower than the left, but this is where, as a technical analyst, I can take some creative license, let's call it, in terms of adjusting my analysis, and I'm going to call that a double top, and it would be a cup and handle pattern, in my opinion, setting up if we do see a healthy little bull flag of daily consolidation. RSI topped out back at 75 on that initial bull move, and here we are up at 74, so that's something to be aware of as well. So Cron is going to be looking at all-time highs. Cron's all-time high is 1530, and it's looking great for all-time highs in 2019. There's been plenty of times in the last 6 months where we've looked at the major 5 names, the tier 1 names, and said that Cron is positioned the best out of the bulls, and then the deal came out, and obviously with where we stand right now, I mean, just comparing to ACB and obviously APHA, but we need a 100% move, 95% to all-time highs. APHA from where we stand, we need well over 100%, and Cron at this point, we need about 11, 12% or so. So obviously in a much better position, and it's probably going to be the first name to hit all-time highs out of the major names if this market stays strong. TLRY, so not going to sell their shares, they say. Market responding to that. Big gap up open. There was a little bit of lag time on that news where it hit pre-market, and it was only about 90, 91 at that point. The run had already started. It was clear that there was a news leak. Someone was acting on inside info, where the price for TLRY was up 10% before the news even hit. But then after it hit, we were at 90, 91, and then we quickly ran over 100 pre-market. And that was an opportunity that I missed, but wasn't ready to sit down and dive into TLRY on a whim, but obviously that would have worked out. So hourly higher low trying to form here. We're not as confident. So when we're looking at this consolidation at the end of the day, we're saying, all right, we have a level to watch of 95.11, but we don't have much bounce off of that. The bulls didn't prove that that's, a support level that's clearly holding. But if we look at these other names like Cron, we have the long lower wick and a pretty decent bounce off of that level. So that is the support level very clearly, but because we're down at the low of this candlestick, we didn't get much bounce off of it. We're not that confident on this hourly support level, but it's all we have to go off of besides the low of the day. So we will be watching 95.11 key support and 103.69 is key resistance, as the bulls held on pretty well with that gap up open. T-God, there's our bull break. So now we're getting into the names that have our daily trend change, and look at the volume. It's just perfection. So this is exactly what every bull wants to see. OGI is another one we're about to look at, where we have, nothing standing out for the bears on the volume pullback, and then increasing bull volume to kick it up a notch for another leg higher. 241, 242 was support holding. Clear bull break. From here, we're looking at the next resistance level of 324. And if we look at the hourly time frame, where was the trend change to indicate that the daily higher low had been established? We hit the low, we bounced and topped out for a lower high at 250. We then held support at the open on another day. Still, we're struggling with 250. We, poked right above it real quick, came back down, struggling at 250, clear bull break with the volume behind it. And any point after 250 and 255, it's clear that the hourly trend has changed. You stick your stop loss level below 241 to indicate that, yes, that's likely the shift that's telling us our daily higher low has been established. Let's see if the bulls can see this continuation move. And obviously it did, and the bulls are in full control. Hourly end of the day support is a higher low at 290. And again, clearly bouncing off that level. That is clearly a support to be watching. OGI, another one of the perfection follow through moves. Bull flag on the daily, establish that higher low. And this resistance that we're currently seeing, we topped out here at 643, and then the next level is 678 to be watching. Not sure where those lines came from. So 678 is the next resistance level to be watching. Let's see, we also have a resistance level here that broke, so that's it. 678 is next. And again, bull volume compared to the declining bear volume, it's just perfection of the trend change and exactly what everybody wants to see on all of these major names. Hourly time frame, where was the trend change on the hourly? Low of 530, topped out at the high of the bounce of 560, which was just a lower high, pulled back for the higher low at 544, and there's our bull break to start the day back a couple days ago. Bull break of 560 confirms the hourly trend change, gives us our daily higher low, and then we just put our stop below the low at that point, which is hopefully some acceptable risk. And if it's not, you decrease the position size so it is an acceptable risk, and there's the follow through. Hourly higher low for OGI. 624. And resistance 643, and then that other level in the 670s. N, starting to consolidate. So have we formed our daily higher low? Looking at this candlestick, I can say bulls tried to. How much follow through did they get? How successful were they? I have to look at the hourly. So not changing the trend yet. We have the low of the pullback at 138, topped out on a bounce at 154, pulled back, double bottom essentially, 137, and still haven't done anything to see a higher low and higher high. So anything under 154 is just an hourly lower high, and we have to change the hourly trend to say, all right, that's our daily higher low being established. Let's see if the bulls can make their way back to 167 resistance. So no red flags in this consolidation, but we're just not sure yet. Has that hourly trend, or what we are sure the hourly trend has not changed, but the bulls still have a chance to change that hourly trend on Monday, and we'll watch to see if that is indeed our daily higher low. HEXO topping out here at resistance, seeing some resistance in the 660s. And at this point, we're still maintaining higher lows. Whenever I look at a chart like this, every higher low that we see, when it gets beyond 5 days plus, I then say to myself, okay, it's a trend. We have a trend. It's a pattern. Higher lows every single day. That's now happened 8 days in a row. So I know that when that pattern changes, when we don't see a higher low for a day, that's our indication that daily consolidation is coming. So we're clearly topping out and seeing resistance, but we're also holding this pattern still, giving the bulls another chance on Monday. If we break 618, the low of today, changes the pattern, we look for the daily pullback, and we watch to see what the volume looks like. And you can see it's just a higher low pattern every hour. Not every hour, but on the hourly. 614, 616, 618, 626 is the most recent hourly higher low. And again, that daily pattern is what I would be watching to see, did that rejection stand, and do we have to pull back on the daily after such a significant bull move? TRST, daily inside bar, also looks like it might be ready for some consolidation, potentially a volume climax with the bearish doji from yesterday. Hourly support level, equilibrium here. So we got the high, low of the pullback, lower high at 840, higher low at $8. So that's our range, $8 to $840. If we break $8, we lose the hourly uptrend, which tells us our daily top is set. And then when we lose the hourly uptrend, we look for a higher low. I know it sounds like I'm speaking very easily here. Obviously, it's the flow. I'm used to doing it, but you can slow down the speed on these YouTube videos and try and grasp. But I promise, some people it takes a year. And in the crypto videos, I would get messages from people like, well, it took 8 months, but I finally understand what you're saying. And just being able to comprehend it, because it is a different language to a certain degree. And these videos are ideally, technical analysis 101 speak, where if you hear it enough and you get the repetition and you see it playing out enough, that you become fluent in it eventually. And it's like riding a bike. You'll never lose it once you get it. But if you're months in here and you're not understanding what I'm saying, that's completely normal. Just stick with it. Fire, closing at the high of the day. Here's another one of these patterns. How many days in a row have we seen higher lows? 3, 6, 9, 11. When we change that pattern, it's going to be notable for daily consolidation, but we close at the high of the day. The next resistance, 177, is a double top at the moment, but we're still going to try that Monday. Then we're looking up at 198 as the next clear level. So higher low every day. 170 is the key support level to be watching. And if we lose 170, daily consolidation, the size of the bounce is massive, a 50% plus bounce. So we know that when we consolidate, we will form a daily higher low. We just want to see, the bulls want to see T-God kind of consolidation, or even that was a little extensive. Let's go with OGI. OGI kind of consolidation is ideal. 2 days of pullback, low volume, lower wicks of bulls buying the dip, bull flag consolidation and continuation. So when fire pulls back, we just want to see brief couple days and then increasing bull volume to see it keep going. So we have the smaller tier names have already gotten some follow through from their breakout, and that's very key. And if these major tier 1 names do the same thing in this coming week and give us a little higher low and higher high, it's going to only benefit these smaller names significantly, and it's going to be a big time boost for sentiment in this sector. And again, completely shifting perspective from just a couple weeks ago when the market was collapsing. And we still need that weekly higher low and higher high on oil and the S&P 500. Those are all systems go. So I want to make a list in my brain. What do we need for all systems go for the bulls to be very aggressive? It's a weekly trend change in oil and the S&P 500. It's daily consolidation and continuation moves on these major names, and it's possible to happen. So Q1 2019 certainly getting interesting, and we'll stay on top of it. I'll see you all tomorrow with USMJ. Hope you all have a great Friday night. Be safe, have fun, do good things, and Shouldn't have said and. Got nothing. Going to share with you all my trading trinket good luck charms that I keep on my trading desk and travel around with me. The first is an elephant from one of our members. I believe he sent that from Thailand. Second is your standard moose when you need the bulls to show up. Then I got Bert. Gave that to my grandfather 20 years ago. And the real winner, this is a gold-plated horseshoe that my grandfather got. He was in the Battle of the Bulge, but this is from a French farmer who let them stay in his barn overnight, and he put gold plating on it and then gave it to him on his way out. So that's what I use for good luck, and I highly suggest that you all have little trinkets for your own. Can't hurt.